Plus, at some point, a few years ago, we were joking that you could pretty much time like local tops by when Strategy announced that they had bought. I wonder if you're going to be able to start tagging local bottoms by their sales announcement.
Yeah, this is a capital structure. I don't think people have realized it. We've talked about it before, but like people haven't realized how elegantly this capital structure is built to underperform.
And here we go again. After a long summer break, the world's second most popular podcast is back.
Yes, certainly not the second most frequently published, but
true.
That's probably part of it, right? It's like a rarity. It's like you pull like a legendary gacha when an episode shows up.
Yeah, it's like a fine wine, you like keep it in your fridge for a couple years, and then you.
Yeah, and we're also like we're also just going to do proper vintages when there's like a good harvest of topics that month.
Yeah. Okay. We haven't recorded in a little while. I can't say that like a huge amount of stuff has happened, honestly. But there are some things, and there's interesting things to talk about. But
I mean,
like
we're going to summer, right? Summer is usually like pretty much that time everywhere. Like even like the funds who tend to do crazy stuff are like off on the beach somewhere.
Yeah, I mean, and also maybe all this crypto stuff has been outshined by situational awareness, going from like 45 bill to whatever it went down to 4 bill. I don't remember.
Whatever their Anthropic is worth.
Yeah. Panic sale to Citadel of their portfolio, and yeah, that was funny. Although, and I looked at some of their positions, bit of a detour, but we'll just go from here. But I looked at some of situational awareness's positions, and all the companies. So it seems like their investment thesis was that AI would create a massive increase in demand, and there's like certain points in the supply chain that are bottlenecks, and he was trying to invest into those bottlenecks. But a lot of these fucking companies were trading at like 70, 80 times earnings. Like,
yeah,
like it's not like he was going into like some, I don't know, like an energy company that like had a pretty stable business but was gonna boom, which you like. You could maybe justify leverage in that situation if it has like a stable baseline revenue from normal stuff, and then you expect it to shoot up. But no, he went into like these like very early, very speculative things with high leverage. It's like, okay.
And the fact that it was called situational awareness is kind of like just the cherry on top, right?
Yeah, exactly. The awareness was not there when needed, but he did go big, which I can kind of appreciate, and he's like 28 or something, so probably
I think we all learn our lessons with leverage. He did so with a bigger pot than the average kind of person will, but you can't say that the guy hasn't like recognized the right stocks to be in for the last 12 months either, so there is sort of some goodness here. Obviously, we're starting from scratch again. Let's see how it goes. And like he learned that stuff can pull back for the first time in his life. But yeah.
Yeah, I mean, and he's got a big stake in Anthropic, which is like probably going to be fine, right? It just, yeah. I have this really dumb take on this whole situation, which I'm going to share because it's been the summer holidays and I've been in Moomin world with the kids, and so my brain is not operating at maximum capacity. But basically, I suspect that a big part of his mystique was just his name. If his name was like Bob, he would not have raised a multi-billion hedge fund to do AI.
I think that's true.
I also wonder how the FTX connection works for you in this case, right? Like you had like, oh, I would have done all this great stuff, but I got rug pulled by this asshole thing, right? He was he was proximate enough to FTX to have a spotlight on him, but not proximate enough to be dragged into the whole malfeasance thing. So that probably opened up a lot of doors and gave you a lot of context. Kind of jump started that part.
Yeah, I mean, FTX, besides that they were investing money they didn't have, they were kind of incredible investors. So it's like, had they done it with money they did own, it would have gone great.
Yeah, like the FTX kind of distributed returns to people who had on the exchange is about 106% or so far. But if they had just held off on the Anthropic sale for a couple of months, it would have been already 300%. If they had actually held on to the day, it would be about 12x or something for the entire FTX holder base, which is kind of hilarious.
Well, that was a liquidation process. It wasn't exactly a wealth management operation.
Yeah, but
and I would imagine
the
also more
process will take a long time. So it could have been so that by accident, the Anthropic position would have been pushed for later for whatever reason. And at that time, there would have been, like,
have you seen the fees that the liquidation team was charging? I'm pretty sure that we just have taken into that.
Yeah. The Anthropic position was so good that they could have like kept stealing money from the thing, and still the returns would have been amazing. So like, yes, the fees are exorbitant, but like the Anthropic position was so good that it didn't really matter, and the Cursor position as well.
Yeah. Anyway, should we talk about market conditions in crypto world?
I mean, sure, why not? This is still by and large a crypto podcast, even though we sometimes forget about it and go into geopolitics.
Mika, do you want to give an overview of how you see the market, and then we can, I don't know, argue against your view?
Yeah, I say like there's some, it's kind of difficult because like if you think about all the DeFi P ratios and stuff, it tends to be like the numbers look the worst at the bottom. So in some sense, like trading volumes aren't really huge, but like they're sort of maybe stopped trending down, maybe found like a higher low in some sort of big picture. But that means that they have to stop going down as well from here. But like I think there is like some legit interesting stats within there. So if you look at like the trading volume on Solana, it used to be very meme coin and Sol denominated, and now it's actually pretty like RWA. There's actually a surprising amount of like stock stuff that trades pretty well in terms of volume. So the kind of pie chart looks like, if you told me that, okay, the pie chart looks now, it looks so much healthier just from like the kind of long-term picture perspective. And it looks like the kind of base for what could be the future. Like capital formation, I think, has kind of come back a little bit. So like MetaDAO, for example, there's a lot of launches, a lot of companies racing through that. So that means that people are, and the kind of retail side is investing enough where these businesses get started. It is worth noting that their valuations are like 10 times lower than what kind of used to be the case. But still, I think like that's again a healthy sign, which is if you're raising at 3 million instead of 30 million, well, the returns are coming back, right? Because the returns come from like compression of value in some like cyclical sense, at least. So that's, I think, good. There's like a couple of these indicators around this retail interest around people like following Ansem or whatever on Twitter and his activity levels. So it could be like we've been in this kind of bottoming out process, which looks a lot like all cycles, and we're heading up on October whatever 4th or something, which is the day of 364 days since the last peak, which is like the average of when we've hit bottom. So I don't know, like it seems like it's hard for me to say, like it doesn't feel like there's enough excitement to really start like a huge run or anything, but there is like the pie looks a lot healthier, and like the kind of excess is out, and you can at least imagine there being returns when a lot of like reasonably good companies on MetaDAO are valued at like 6 million or whatever. Like you can imagine that there's some returns to be had there, and those returns really have to be on the table for the market to turn around. So yeah, I think it's like okay, and maybe we are in the bottoming out phase and quite far into it.
Yeah, I mean, I haven't been tracking that as you have. I usually basically get my Syndica updates and then start digging through that, since I haven't been paying too much attention to the Solana side of things per se. But I gotta say, I mean, we're over Saylor's perpetual loss machine in our chat, and I have to. We've been right now by what, 8 weeks oscillating on this. I mean, if we look at Bitcoin, it's been for about 8 weeks oscillating between 57K and 65K, which is pretty much the same range that it was in for a few months back in 2024. I mean, it's pretty much almost the exact range if you look at it in the chart, which I can say it scans as pretty healthy, considering that the market seems to be absorbing quite well the Bitcoins that strategy has been puking out. And not only absorbing the Bitcoins themselves, but absorbing the signal as well of like, oh my God, these people are not like a perma buyers anymore. So I don't know. I'm not one that feels too comfortable calling bottom, but this thing feels sensible. I mean, it feels boring, but that's usually how you want these things to feel.
I should have said that as well, and that's a great point, which is the kind of classic one is market stop going up on good news, market stop going down on bad news heuristic. Saylor selling is what you would, like if you just told me, hey, Mika, like the cycle will go so that it again works kind of like your peak is over 100K and you get like almost 10x returns from the bottom from last time, and then you kind of peak out at exactly the time where the 4-year cycle peaks, and at the bottom at the next cycle, Saylor's going to be selling, not like huge amounts or whatever, but like selling still and kind of having a reflexive downside. And the price stops going down at the previous all-time high of the previous bubble, which was in 2021 of 60K. I'd be like, oh yeah, that's the bottom. We're only going to go up from there. Like, you know, like if you just told me that and I knew nothing else, I would be like so balls out long, you know, which kind of makes me think that I probably should be, because the simple heuristics seem to work better than like all the Fugazi trying to be like smart stuff in some sense.
Yeah. I think there's like a couple areas to look at now as some potentially spicy takes, probably not for our listeners, but for the industry. So it seems to me like VCs aren't deploying at all right now. That's usually a great signal that things are going to get better, because VCs are fantastic at timing a market that's getting overpriced.
Right, let me just say to that, we just had a call because we're deploying as a fund, because we believe that we should do the opposite of the VC deployment chart. We had a call with like kind of a blue chip Solana name that you'd think like would at least have some investor interest. And they were like, you guys are literally their only call we're having about buying. Like, what is that? Like, I haven't heard that word in a while. I was like, okay, maybe we should be buying at this stage. Like, that sounds pretty good to me, mate.
Yeah. It's the the classic wisdom of buy low, sell high is easiest to execute by just buying when everyone else is buying. Of course, things may go down, so I have no idea, honestly. Like, I think, so you look at like the VC landscape, that kind of smells like bottom to me a little bit. You're like starting to see what you said, sort of like meta DAO raises, working out. I'm not super bullish on like retail interest or anything like that, but there's like some movement. You're starting to see like tokens pump every now and then, which is, it's not a signal, but it's like something. Like most bear markets since like the only Bitcoin era have included this sort of like slightly pumpy behavior, and it goes it goes for a little while. It's not like you pump and then you go up. It's more like you pump and you come down, and you pump and you go down. But it's sort of like,
And let me add to that to one point, which is that stuff is already up off the bottom. So like I think two good names in the market right now, for example, have been Venice and MetaDAO. And those are like, depending on how you count and stuff, but like a few times up from the bottom quietly, which no one has noticed, which is like, okay, the thing that's getting traction, that being up multiples without anyone really talking about it, that's already one of the signs. Sorry, go ahead.
yeah. Full disclosure, they're both in the Equilibrium portfolio, but
Financial advice.
this is strictly not financial advice, but this is what we're doing anyway. You could argue that Bitcoin is not up from the bottom, but then like, I don't know, these are always really tricky to look at, but like if you look at the log chart, it like seems pretty normal. Like my hypothesis is that Bitcoin log chart just kind of looks like a pretty steady curve in the long term where it flattens out, and it sort of is following the curve pretty naturally. What I think makes things more difficult is the macro, and we don't need to get into this too much, but I think the sort of traditional market right now, it is in a really weird position, where I think the only question that matters is essentially, can central banks pump their way out of this, as in like print money to get out of it. And I've been wrong before. I thought Corona was not possible to pump your way out of. Like, I don't know, 50% of global industry shutting down for a little while. That didn't feel like it was going to work. But they did. And I think it comes down to just like tolerance for inflation, like almost like how much the population is willing to tolerate. And it's a bit of a cynical take, but my sort of general view is that the powers that be are gonna like go almost to revolution before they let this shit crash. And I don't think we're close to revolution in most places. So
Bingo.
yeah, but that can change quickly as well. You know, like yes or no revolution sentiment, I think, is a fairly binary thing. It really requires like one small trigger, and then things change really quickly. But if that's the case, then you want to be like all out in assets, and you know, you're assuming inflation of the money supply, which usually is good for crypto. If not, then you want to be in cash, but timing it is really difficult. The other thing I just wanted to say on that is like, this is like a hard thing to quantify, but in every bear market that I remember, there's this like moment where there's like not really anything happening. Things seem to have stabilized a little bit. And it's usually been very, very difficult to predict what kind of like kicks it off. And it feels to me like it's probably not the actual project or whatever dynamic that kicks it off, but it's more like a macro thing that kicks it off. And then it just gets funneled into like specific names that then get talked about as having kicked off the market. And so that kind of calm before the storm, I think there's some feeling of that, but I think it also usually takes longer than many people expect. So then you kind of, we're in this sort of waiting phase as far as I can tell.
I mean, even if you look at how this played out in 2024 on that range that I was mentioning, it was actually longer than what we're doing now. It was, I think, from March to October or thereabouts. So we kept doing this pretty much same seesaw. This time around, it looks a little bit more compressed. And again, the fact that we didn't do some major nosedive on the triple treat of strategy announcing they were going to sell some, doing a test sale, and then doing a large sale, right? And the market is just like, fine, I'll take it. I don't know. It seems that again, I don't want to say bottom. That kind of gives me it gives me the warm and fuzzies, right? Plus, at some point, a few years ago, we were joking that you could pretty much time like local tops by when strategy announced that they had bought. I wonder if you're going to be able to start tagging local bottoms by their sales announcement.
Yeah, this is a capital structure. I don't think people have realized it. We've talked about it before, but like people haven't realized how elegantly this capital structure is built to underperform. Where imagine you're trading on leverage Bitcoin, and in some sense, you're constantly at max leverage, which is possible for you, but the way the max leverage is defined for you is like kind of very adversarial, where the leverage is only available to you at price tops, and it disappears suddenly at price tops, bottoms. So you're essentially leverage longing always the top, and then having to pay your funding costs at the bottom, with no more capital coming in. That's essentially what Saylor has built, and it's like active management, except not even active. It's like systematically only having access to capital when it works against you. It really is an elegant way of losing money. Kudos.
Well, but so it's a very dumb structure, that's for sure. Just like as a hypothetical, if Bitcoin continues to grow long term, it could still work out. Like if the lows are always higher than they used to be, and blah blah blah.
It works out in the sense that Saylor is rich and will get richer. It should work against the equity owner of strategy in basically every case. That is difficult.
Yeah.
But
except for that,
only scenario. It's like he's going to have more AUM over time, like in dollar terms, even if not BTC terms. In BTC terms as well, actually, but in BTC terms relative to the equity, that's where the magic happens.
Yeah. So I mean, I think the market is kind of in an interesting position, and to bring sort of another perspective, like the TradFi players that are now playing around in the markets, they seem to be very serious and relatively kind of like don't care about market conditions. In the past, it's usually been the case that you've gone, enterprise and institutional excitement near market tops, and then it has completely dried up at some point. And I think now that's somehow different. Like like the processes are ongoing, the on-chain volumes look sort of good enough, so that there's a lot of these players that they do see an opportunity here, and they may be observed enough cycles to kind of have some degree of faith that things will keep going. But having said that, a lot of that stuff is still kind of more piloty than maybe a lot of the marketing would have you believe. So they are definitely doing things like the DTCC just did a repo, like a repo test trade across a few different networks. It's like happening, but I don't think it's realistic to say that like TradFi volumes would come on chain in the near future, or like in the next few years. Like it's going to take a long time for them to really get comfortable. And then also where those volumes are going to go, I think is still an open question. I think a significant amount of them will probably be on Canton as of right now, but like it depends so much on how everything goes. Like Stellar is trying to play in that game. I'm sure Ripple is trying to play in that game. Ethereum is doing its level best to not play in the game. Solana kind of keeps chugging along and actually doing all the things the other people are talking about. So I mean, I think Mika mentioned it, but like Solana stock, like you could argue that Solana is the currently clearly the leader in kind of usable RWAs. Like stocks are actually being traded on Solana. I'm not sure that's like really the case anywhere else. And which is interesting because it like, I think validates Solana's sort of very original thesis of like distributed NASDAQ kind of thing. And now Solana just, did they already have the upgrade for 200 milliseconds?
No, it's gonna come in soon, but it's being loaded in now. So.
Yeah, so 200 millisecond block times, is that correct?
Yeah, among some other stuff, but yeah, that's one of the headlines.
Yeah. Which for the listeners, just to sort of illustrate, I think a global ping, which is like the smallest essentially packet that you can send over the internet from point A to point B kind of thing and get a response. So something that kind of goes around the globe, I think that's on the order of like a few hundred milliseconds. So this is faster than that, and that has some dynamics. Like this is essentially like impossible to do while fully distributing all the data in real time, but Solana's design makes it such that you don't really need to do it. It's more like best effort, like data is distributed as fast as it can be. But it's a very impressive achievement, and I think it gives people a lot of like it makes all this like TradFi looking behavior very interesting.
We may have talked about this like a year or something ago or more, which is the consolidation in the industry. I remember this being a big topic.
Yeah.
And I feel like this has happened in such a healthy way where a lot of this, like the last generation of like competitors to Solana or whatever, apart from, of course, the ones with distribution, so Robinhood, Stripe, but like the kind of otherwise, those are like now very, very dead. And the industry spearheaded around Solana, and everyone who wants to build something, or a lot of people who are building stuff, especially a little bit more crypto native, they are on the Solana side pushing that. So now we are in a place where we have that one thing, and we can see like if that thing can get anywhere. But now we're not like distributing our efforts needlessly across too many spaces here.
Yeah, it's one of those things. I mean, I still think the Solana chart looks like shit, but you know, it's that also may provide an opportunity if you're actually a believer, because it's definitely underperforming against everything else. Unclear when it will stop. But anyway, back to the Solana thing. I've said before a few times that if there's something that I do respect a lot about the community is how they just continue building regardless of anything, right? And there's that line. I got a little bit, I think it was last year when the whole Google, what was the horrible acronym, like GCUL, like Google Compute Universal Ledger or something completely hideous. Anyway, when that thing came up, got worried about a bit there for Solana, but there's that line about on a race between a rabbit and a wolf, you should bet on the rabbit because the wolf is running for his dinner, but the rabbit is running for his life. And Google is coming at this thing like they're definitely running for the dinner, but Solana, all credit to them, is still running for the life. So kudos to the community as a whole in there. For all the other shit that I've given them, they are still doing that.
Yeah, I do agree that Solana price performance has not been what I would have expected it to be. Especially since like looking at the grassroots stuff, like what's happening in terms of projects, like, and maybe this is just my echo chamber, but my pretty strong feeling is that almost all the interesting new projects that I see are on Solana. And not to say that they're necessarily like world-changing things or anything like that. I don't mean that, but just in terms of like, where are people creating startups in a sense? Like Solana feels like the current San Francisco. It's certainly not, you know, Ethereum. It's certainly not anywhere else. And so like there's power in that positioning, and I mean, Ethereum lost that position to Solana in a way. But it doesn't feel like Solana can really lose that position to anyone else. Like, why would it be so much better to create a project somewhere else? Like, there's arguments for, like, you know, you can have institutional flows and stuff like that, and if the banks choose a network like Canton, then there's like blah blah blah. But in terms of doing these kind of like where you don't have like a TradFi dependency or like, you know, something structural like that, you just need a network that's performant and cheap and helps, like, where you can iterate and is pretty secure and blah 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 blah. I'm not sure you can really lose that, and they keep doing things to sort of keep that going as well. Like, they have these like accelerators and blah blah blah. Like, they have MetaDAO is arguably the only functional funding mechanism in the market right now, and so on and so on. So I don't know. It looks I think quite good. It'll be curious, or I'm curious to see how the price performs kind of once things start moving a little bit more. Let's talk about RWAs since we were here. I shared this before we started recording with Mika and Ricardo. Arrakis Finance did this investigation of who's buying RWAs. So for people who maybe aren't following the TradFi stuff, like, there's a massive wave of TradFi, and by TradFi I mean like banks and financial institutions, but also just like companies and enterprises. They're tokenizing all kinds of stuff, huge amounts of them, like the DTCC. No, sorry, the Nasdaq is tokenizing stocks. The DTCC is tokenizing daily repo. Like, there's all kinds of stuff going on. My big question, which is kind of what this Arrakis Finance answered in terms of, in a snapshot kind of way, is like, who's going to buy all these assets? And you could argue that Solana is in some way an indication that there is some demand for buying these assets, sort of more, I guess, on the retail side of things or something like that. But when you're talking about tokenizing crazy amounts of real world assets, like, for that to kind of work, like, we have an opportunity to be the center of all finance, but somebody needs to be buying the assets. If they just put the assets on chain and there's no volumes, like, this whole thing goes to, you know, stops being interesting. And this Arrakis Finance thing basically found that the vast majority of RWA purchases are what they termed, or from what they term, DAOs and treasuries. What that actually means is, like, a big portion of it is things like Sky. So Sky has this Prime program where essentially, like, they give credit lines to teams that the teams can then go and essentially hold yield bearing assets, and they have to take some of their own risk on there. And because Sky, I don't know what the stablecoin, they have a stablecoin called USDS, which is yield bearing, so it generates yield directly. And so they can essentially inflate the supply of that out of thin air to some extent within some risk parameters. And this is what the credit lines are. And so it functions kind of like a central bank. And so things like Sky, things like Athena, which functions sort of similarly, but they don't give credit lines externally, they kind of do it themselves. Various other types of protocols that for collateral or structural reasons need to hold relatively safe assets. That's actually most of the buying. And Arrakis Finance looked at 12.4 billion worth of assets and who was, like, holding them, all Web3 native. And I think this is a really interesting point where, like, in order for this, or it seems to me like, in order for this to work, we actually need to create Web3 native ways to purchase enough of these assets to make these interesting. And my, like, naive kind of easy way to do this is that everybody stops using Tether and everybody stops using Circle, and we all just use USDS and USDE, and all that capital comes into on-chain assets. That would be like, if we think about structural buying opportunities, the fact that Tether and Circle don't buy on-chain assets, where that capital doesn't get allocated within the ecosystem, it happens off-chain. This is in some ways a problem because they account for the largest sum of capital across the industry. But if you could imagine like 200 billion worth of capital being allocated directly on chain into RWAs, that would be enough, I think, clearly enough to make this a very interesting place to put assets into. And that makes sense because it doesn't require the retail user to go and, buy a stock. I'm sure that stuff will happen as well. But I think, do need this sort of like systemic buying in the background and large quantity to achieve it. Anyway, I'll stop there. I'm curious what you guys think, because like I think we are kind of on the cusp of this, and it's sort of a make or break in terms of TradFi for a while.
Yeah, I don't know, man. I haven't. I mean, you just sent a link right before I signed up, so I really haven't had any time to go over it.
Time to prepare.
Of course, that would be crazy. And on top of that, fucking Twitter shows the image and like doesn't let you expand for whatever reason. Maybe it's because I'm not logged in, so it's like tiny labels. Anyway, the one thing that I'm still undecided about the whole stocks on chain thing is that for you to grow that, you're going to have to find something particular that appeals. For you to grow that on retail, you're going to have to find something that appeals to the average retail user that they can't get otherwise. Sure, there's the 24-hour trading, but the majority of retail users are not necessarily going to care about that. So you're talking that about what?
I think retail cares a lot about 24-hour trading simply because the trading times are when they're at work. And so markets being open when you decide to buy is like an easy way to sort of slowly pick up people.
I actually agree.
It's perfectly possible, but I'm not sure if again,
do you buy stocks? Just for context.
Yeah, but I'm an anomaly, right? I'm thinking of the people who I know.
I understand.
Not in crypto.
I understand. But do
stocks.
you buy stocks in multiple markets?
Technically, not anymore.
Maybe I'm an anomaly, but I don't know. Like I have Asian stocks, I have European stocks, I have US stocks. Whatever. It's fucking annoying. Like whatever maneuver I want to do, I need to like do some part of it in the evening, then the next part of it in the morning. It's crazy, and all because why? Like, what is the purpose? Why can't we just have 24-hour markets?
But that's less about, I think, about the 24 hours and more about the access, because you're going to want to have like Asian stuff that's not in Trade Republic or whatever, right? So that is one thing that I do think they bring in, but I'm not sure how many retail users care about that, frankly. I mean, most people just want to buy.
It does create like, so I think like I think retail does care to some extent. I'm not saying this is going to like change the world. What I think is going to change the world is trading being continuous, and simply because trading is continuous and not done in this silly pre-market, we have like a few hours before blah 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 the market's open way, like almost by definition the on-chain price will start dictating the real price, because that's where information will get assimilated into investment decisions outside of opening hours. Like that's just how it's going to be. I'm not saying this is going to happen immediately, but at some point when volumes are big enough, like it would be insane to like trade at market open and ignore the price that has been going for whatever, like 18 hours.
kinda, maybe for your case, maybe for talking trading, but the majority of people who I know who buy stocks, they kind of do this on a dollar cost average weekly basis to Trade Republic or what have you. They're not that particularly concerned about the movement in this 8 particular hours, the base betting on this company for the next few years.
Okay, but let's
I'm
let
actually
Mika
this
speak in
one.
a sec. But can I say
Okay,
one more
wait.
thing? Crypto companies are also fantastic at getting people into more sophisticated stuff. Like Kraken, I realized the other day they have this thing where I can just buy more stuff than the cash I have in my account because it automatically lets me use my holdings as collateral. I don't want to do that, but that's the kind of thing. Like the traditional market does not innovate. The crypto market is going to get people into things that otherwise like they would not get into. And so I agree, but yeah.
Let me rephrase my objection. It's not that I don't think this doesn't have a use, and it's not that I don't think this doesn't have value. What I'm wondering is what addressable space are we talking about, and if average users are going to stop doing their whole Trade Republic dollar cost averaging thing to start doing this. That is the part that I can really.
But
I don't know how retail thinks.
There's
so I don't know.
two things, right? There's like, will people switch, and then what is the next generation going to do? And I think the next generation is 100% not going to do the Trade Republic thing.
Okay, fair.
Anyway, Mika.
I'm pretty bullish on like not trad institutions, not just like crypto funds, but the kind of in between hedge fundy. Will make money any way we can. Let's be aggressive. We've gotten into crypto over the past 5 years or so and know how to trade this shit on chain on Solana with 200 millisecond blocks. We're gonna trade this stuff throughout the night. We realize other people are gonna trade this stuff as well. We're gonna have actually a pretty sick market there. You know what? That market is the price actually. The morning price when it hits, we'll have to reconcile with the price we have on chain. I'm pretty bullish on that thesis.
Which is an investment thesis, right? And like jump trading is 100% going to do this, like for sure. Can you imagine like the situation, like some news comes out 2 hours before the market opens? And then like, as long as you have a good ability to price that news in, like you understand the effects it should have, and there's enough liquidity in the market that's open, like, of course you trade there. Well, it would be great. Like, nobody cares if it's the NASDAQ or something else, as long as the pricing and liquidity is the same, right? And arguably we are, like, as an industry, better at creating liquidity than the traditional industry. Like, if you go into like any localized markets, you very quickly realize these fuckers aren't even using market makers. Like, it's insane. You like put in an order and you wait for some person to come and be like, oh yeah, I want to do this order too. You know, like I think it's going to like completely shift. It's going to take time. This is not going to happen overnight. But it like, I don't know that TradFi has any tools that would allow it to like catch up, right? Like TradFi catches up in terms of their own technology stack by like doing some weird like SEPA instant thing on top of their like COBOL infrastructure that nobody really knows how it works, and it's basically just completely trust-based, and we hope everything goes okay. Like, that's the kind of thing TradFi will do, I don't know, 6 years later. And by that point, like, you just will have a pool of liquidity. Like, anyone who's doing automated market making, which you can imagine in 6 years is going to be like 100% of market makers, right? Like most market making is automated anyway, but like essentially all trading is going to be automated in 6 years time. And so like, why would you not trade that 24/7? Like, of course.
And when you earlier in the podcast mentioned like the Solana thesis coming true, and you can see the bits of that, like I think you see just the path here. Like, this is a straight shot. Like, it'll take time. There's ups and downs, yada yada. you can see the path here. This is so obvious to me.
Yeah. Yeah. And the TradFi institutions might go a different route in a sense. Like it's not clear that like I don't think this is necessarily this sort of like global financial markets are not like a winner takes all thing. I think it'll probably become more consolidated than what it used to be. Like if you, well, whatever broker you use, if you just look up how many exchanges they're integrated with, like it's going to consolidate more than that, right? But I do think it's going to be kind of, I don't know, maybe like 3 or 4 venues max, which broadly have like the full universe. And then in crypto, what makes it even kind of weirder is that by that point, I anticipate that you'll have pretty quick like collateral movements between these venues. Like we already have bridging, and you can think whatever you want about bridging, but like, you know, Tether has whatever USDT 0, where they can just like move Tether around any network pretty easily, blah, blah, blah. Like the stable coins at least facilitate this in a very easy way. And so even those 4 venues will kind of get, from a user experience perspective, fairly consolidated. We have things like intents and aggregators that kind of can function on top of that, et cetera. And so you do see, like, this is not a pitch for Solana or Canton or anything in particular, but like, I think the path is sort of, as Mika said, very clear to like, there's going to be this consolidated financial market. And I have no idea how this very fragmented TradFi market will be able to compete with a 24/7, you know, like very liquid global market. Like there's no way.
So, okay, that I agree with. This is something that I do think is going to happen eventually. The old rails, well, are old, and TradFi will stick to them.
Deep thought.
No, but I mean, people have no idea how old they are. Like
Yeah.
I was actually just looking up some dates because about 20 years ago, I was doing this financial project for a financial institution that shall remain unnamed. And when they told us what they wanted to run in, and they had just ordered 2 of the machines, they were like an AS400. This is a machine that IBM launched in 1988. So this gives you an idea of how old TradFi is operating, right? They probably not even have discarded those things, or they discarded them, so it was discontinued. So the thing is, this will happen eventually. But I do think, I mean, Andreessen is a cunt, but he does have a really good line that being too early is the same as being wrong. So I'm just not entirely sure of when this thing is going to happen. Even if we do get another crazy cycle right now, I'm not sure it's going to be on this one.
No. So, like I said, long term, but it's a matter of degree. Like, I don't think you take the whole cake on the first try. Like, but what I'm saying, and I think Mika is agreeing, is like the pieces are there to start taking pieces of the cake. Right. And like once you start, like it doesn't take that long ultimately. Like once it's just a question of like, is there enough liquidity? Like,
Okay,
that's a very fast paced game in a way.
that I agree with as well. Now, the other caveat here is a point that we made ourselves about 3-4 episodes ago, which I'm going to sum up as open platforms as good for exploration, but closed platforms are good for extraction. It's perfectly possible that we get some good exploration on Solana and extraction actually happens on whatever Robinhood's thing is, because Robinhood does not seem to think the same way as, say, E-Trade or something. So it's perfectly possible that the extraction actually ends up happening exactly how you're describing it, just on a closed platform.
Yeah. When I say there's going to be like 3-4 venues, I'm actually not taking a stance on how decentralized they're going to be. Like I think there's a decent possibility that something like Hyperliquid is one of those venues, and I don't think you can argue it's decentralized. So And that might be like one of the things which prevents a lot of sort of current or like OG crypto people from seeing what's happening, is that it's just not going to fit their mental model of like, this is what blockchains are. It's going to be more like a more distributed platform than blockchain in a sense. That's possible, but it's also hard to know. It depends. I think how decentralized things need to be depends so much on regulatory stuff that it's like hard to predict. Like I think if the Clarity Act goes through, we'll start to see like a dramatic decrease in decentralization almost across the board. Not even I haven't looked too deeply into Clarity, but like not even that Clarity. I'm not sure if it even takes the stance on that, but just like the more regulatory comfort there is, the more people are going to push the sort of bounds of what can be considered decentralization, because you get more performance and you get lower cost structure. This is kind of like an underappreciated thing in sort of traditional style blockchains, is like it's in some like absolute objective sense very expensive to run thousands of machines to do, linear EVM computations. And so like, of course you want to push that, like, especially if you're aiming at financial markets. But one thing to be said is like, I don't think that necessarily, I do think that the structure of replicated state and synchronized state stays. I think that's actually better than, it's kind of like TradFi had to build towards that from like a single server setup type thing. And I think it's just more resilient, and that redundancy is better. You have better failovers, etc. So I think that's sort of where it converges potentially, is that you have a network of machines running independently in different regions that synchronize constantly, and are like redundant against something like 1/3 failure.
And there's also a lot to be said for public auditability, right? Particularly,
which Hyperliquid does not have, but
I know. What I'm saying is that this goes for this does go for the, I mean, ideally a scenario like what was the Cube exchange, right? That did keep things in chain for a while, trading happened off chain. Like this sort of situation is something that may have value in the future, but we'll see.
I think this is a good last topic to maybe end on. I think there's this friction between how good AI is and being open source as a project. Like if anyone could just like fork Hyperliquid, not even fork, but like literally copy it. Like you can't even expose, like, let's remove forking from the picture. People have already done licensing structures that make forking kind of illegal and blah, blah, blah. But if you can just like clean slate copy the architecture without running into any like illegal territory, I think that creates like a problem. Not for Hyperliquid now, but like for projects that are building up to something. I think we'll start seeing people not go open source very early in the future.
We've gone over this before, and I really don't necessarily think that's going to be the case in most situations. You can't fork liquidity, you can't fork market making. That trust in the partnership build up, has a lot of weight.
But there's this period, like let's say you start a startup and then you get to that point, right? There's this period in between where you want to make it as hard as possible for anyone to compete with you, because you're not yet in such a stable position. You don't really have a moat yet. And depending on what you're doing, that period can be longer or shorter. And so my point is like a lot of crypto projects in the past have started out going open source like really early, like really like before launch, stuff like that. I think that's going to go away. Like it's just there's just not a very good argument for giving your competitors any kind of edge.
Well, there's something that we might see there, and I hadn't thought about this until now that you brought it up, and this would actually be ideal, is that we're not going to see again any of the, I'm going to raise from a white paper kind of thing, because you probably don't even want to talk about what you're doing and how you're doing it unless you're ready to throw it at the market. This doesn't necessarily mean this doesn't necessarily go against open source.
Gotten the liquidity or whatever the integrations,
exactly. You secure the partnerships, you secure the market makers, the whole thing. You actually launch this as an actual working business as opposed to like a yay, whatever crypto project kind of thing. That could be a positive externality of how easy things have ended up being from a copying standpoint.
Thoughts, Mika? Full agreement?
Nothing from me on this one. There wasn't simply opportunity enough to give financial advice at this point, so I decided to stay quiet.
Hey man, you call bottoms on like 3 things. I think that counts for plenty.
I think I also called it a bit early in the kind of bottoming cycle, but I think to be conservative, let's say this is like the kind of bottoming out phase, but we're still smack dab in the middle of it. But 2 more months would get us to the kind of, if someone hasn't, you can probably find this on Twitter or something, but the kind of 364 days and 1,060 day or whatever rule it is. According to that, we're putting in the bottom in October. So like right now it would be like, oh yeah, maybe one more annoying quick dip. Maybe the bottom already happened, but we kind of stay here for a while until October. We're halfway through this like depressing era, which means that we still have a lot to go. But a lot of this stuff that is good trends and stuff will just be better in 2 months as well. And we can kind of get going from here. 2 more months and let's see how like if things actually if the bottom is again in the October, I'll just simply stop doing any other analysis except on timing, except the 1,060 day rule, and just like do that over and over again for the rest of my life.
Yeah. Whenever I think maybe this time will be a little bit different. No, it's not.
Very, very financial astrology. This is beautiful.
Oh yeah. I mean, but come on. Have you been in crypto for as long as we have?
I know. I just,
something
sense kicks in and I just shake my head, man.
This is completely unrelated, but I always loved the phrasing. I saw this when Novogratz was kind of first. I first really learned about him in like through crypto, not through his like any other before that, and kind of the very early days when he was involved. And he was talking about like, and maybe this was like BTC was around 6K, kind of coming back from 20K, and he used the term the ballet of the charts on CNBC, which I just thought is a beautiful term, and I always loved that. And every time I look at like a chart, I think of the term ballet of the chart, and then he talked about how the hopes and dreams of every single person you know is in that chart, and what a man with a sense of words.
Sometimes you get a Terra Luna tattoo and the ballerina breaks his ankle and sprays the first 3 rows with blood, but sure.
I'll say a lot of hopes and dreams are in that chart, and they are broken, but they are in that chart.
All right, everyone. Thank you for listening. We'll see you next time.
Ta-ta.